So the Fed just cut rates by 25 basis points, and Bitcoin is behaving how it always does around rate cuts. We talked about this yesterday, and the patterns are freakishly consistent. Green before FOMC, red after FOMC, and now with the 25 basis point cut, are we going to see the continued trajectory lower? In today's content, we will be diving into the weekly time frame all the way down to the 2-hour so you can stay in the loop with current price action. Which brings us over to our first chart of the day. Now, before we get involved, what actually happened yesterday? So we got the confirmation of the 25 basis point cut, which introduces liquidity over time, but initially there is short-term chaos before the overall direction is decided. Now, looking at the chart here, it's pretty evident based on the two prior cuts from this year in September of 2025 and November of 2025, that what Bitcoin does is tend to see a rally into the event. The event occurs and then we see a rejection. Okay, and we see a downside behavior in price action. And it's been the same for the last two events. In November, we saw a run up into the event and ultimately saw a short sell the news into the announcement. And right now, for the third time this year, it doesn't look any different. We've had the announcement and we are seeing Bitcoin decline in the short term. Now, heading over to some macro news, we've seen Jamie Dimon say blockchain is real, and now it's becoming more effective and more efficient after JP Morgan moves 16 trillion in 1 day via blockchain rails. This is not bullish hype. This is real world adoption from the largest bank in America, which now brings us over to another piece of macro news where the CFTC has launched a pilot program for tokenized collateral in derivatives markets, allowing Bitcoin, ETH, and USDC to be used as margin. The move aims to provide greater regulatory clarity for the use of digital assets in TradFi markets. Now, what this ultimately means is 1, greater regulatory clarity, 2, more liquidity pathways, and 3, the possible integration of TradFi and blockchain, which leads us to the big picture. Bitcoin continues to integrate into financial systems, even though the chart is playing games. Now, speaking of games, let's head over to the weekly time frame for Bitcoin. And what we can see here ultimately is that Bitcoin needs to break through 95 to 100K, which is this imminent supply block. This zone has been rejecting for the last few weeks, and we need to see the bulls step in here in order to get the push through. Failing that, the likelihood is that we actually resort back down to the demand zone, which actually sits from the lows back in early November, roughly in the mid to low 80K territory. Failing to hold that and actually getting a liquidity sweep to bring us back into this range, we also have the lows from April of 2025, which sit at 74K. So it's quite clear now on the weekly, the macro timeframes, that we are currently caught between the supply at 95K and the demand in the low to mid 80K territory. Now, to be honest, this price action doesn't surprise me because based on FOMC and post rate cuts, we do tend to roll out into some uncertainty, which then leads us over to our daily time frame chart, and we are studying the Bollinger Bands here. So ultimately what you can see is that we have again run into the upper Bollinger Band at 95K over the last couple of days and have seen rejection, which has brought Bitcoin down to the mid band of the Bollinger, sitting on a knife edge at 90K. Below this mid band, we do have the lower band of the Bollinger, which currently ties up with 85K, which then resorts back to the same demand zone that we was looking at on the weekly time frame. So if Bitcoin does decide to roll over and stoop below 90K with daily closes, we have the lower Bollinger Band as support in the 85K territory, which ties up with the demand zone on the weekly time frame. So to summarize the daily, we are in a compression phase waiting for a decision with no clear trend until one of them breaks. Now, heading over to our 4-hour time frame liquidity hunting maps, let's look at what's going on in a little bit more of a zoomed in perspective. So you can see on the chart here that we had 2 failed attempts to break through the supply and had a liquidity sweep in these levels. And we ultimately, on the second attempt of rejection, saw a push down below the supply block. Now, what we've actually done is come in for a potential liquidity sweep in the TP area, which ties up very close with the lows from sort of early December. So right now we are seeing a slight positive reaction for Bitcoin, but nonetheless, we do have the supply block above that we need to push through, simply resorting back to the daily and the weekly, which sits between 91 to 95K. Failing to hold this TP area, and if we do get a potential rollover, then we simply look for another liquidity sweep back down in the demand block, which sits between sort of 88 to mid to low 80K territory. This is classic post FOMC behavior volatility without direction, which now brings us over to the next chart, which is the 2-hour time frame, where we've had a double liquidity sweep of the highs. We've now resorted back down into the TP area and are currently seeing some relief. And it's no surprise, really and truly, because we have support in this territory from sort of early December, okay? So at this moment in time, it looks like Bitcoin is trying to make a decision on whether we want to sort of retest up into that supply block or whether we are going to push lower and initially retest demand. Now, post FOMC, this is normal behavior for Bitcoin, and we should expect the volatility. This is ultimately the textbook hunt before the final direction decision is made. Now, if we look at an ascending triangle pattern here on the 4-hour time frame, it's quite striking that we have an imminent level of resistance that we need to see Bitcoin break through. And this is where we've seen those failed attempts and ran into that supply block at 95K, tying up very nicely with this resistance trend line. And we also have this support trend line, which was created in late November, which Bitcoin has been adhering to. So simply put, this structure is compressing and we are awaiting a decision. Now, with that said, and with having 2 retests on the resistance line, and we have post FOMC behavior, which is typically pointing to the downside for Bitcoin in the short term, is this meaning that we are likely to see some relief here before following back down to this support trend line for a third point of contact? And it's pretty evident that we are building higher low structure over time, and we simply just wait for a decision. If we do get this retrace back down to support, this is where we could offer an opportunity and see some settlement after the post FOMC cut announcements. A gentle reminder, this structure will not last and a decision will come, but the direction depends on higher time frame acceptance. Now let's head back to the FOMC chart, where yesterday we stated that Bitcoin is likely to roll over following its typical events post rate cuts. And now that we've actually seen the rate cut itself, Bitcoin is doing what it always does and is resorting to a push lower. This isn't a signal, it's not a forecast, it's just what the chart shows historically. Now, if you are trading this post FOMC insanity, I've attached the link below for the platform that we use. If you're looking for real tools, please feel free to check it out, or just stick around for your daily dopamine hits. Now, a quick summary for today's video. The higher time frames, the weekly, is pointing towards needing to break through 95 to 100K, which is the imminent supply block and wall above. Failing that, we do have the demand zone, which sits in the prior lows from early November in the mid to low 80K territory. Zooming to the daily, it's ultimately, you can see we've got the mad compression here, and we're hanging on by a knife edge at 90K. Fail to hold, then ultimately we have the lower Bollinger Band, which sits again at the low to mid 85K territory, tying up with the demand zone from the weekly. Zooming into the lower time frames now, we've had two major liquidity sweeps on the 4-hour in the supply block at and around 94 to 95K, bringing us back down to the TP area and lows from early December. Fail to hold, there is a likelihood that we sweep back down into this demand block and again back to the mid to low 80K territory. The 2-hour also paints a very similar picture with an in-depth and intricate look into these resistance points on the supply block. The perfect retest entry for a short after the FOMC meeting. With the TP area being hit, we now await a decision with either a run up to the supply block once more or a continuation of this wave back down for another liquidity sweep in the low 80K territory and demand zone. And finally, we have the ascending triangle where we are building higher low structures on this support line. And we also have the major resistance trend line above to break through. This is all noise, it's all chop until we get a definitive decision in which way the trend wants to break. Which now brings us to our final line. You do not control what happens to Bitcoin after a rate cut. However, you do control the exposure you have when the volatility hits. Until next time, goodbye.